Hey everyone, Paul Mike here, the virtual investors, and we're going to go over kind of the state of the market, what's going on. Mike's got a lot of good articles pulled up here, and we're going to kind of hit that and go in a little depth into where we think the market might be heading this year and what inventory is going to look like, all those kind of things. So, Mike, what I saw with Altos Research, what they had just done, our inventory is 471,000, right? Going into this week, which is really, really low. They were predicting it was going to be around 525,000 at year end. We end up far below that. So with constricted inventory and a slight decline in rates, we're probably going to see a little bit of a spur in the market. And if rates drop a little bit further, like we talk about, once they get to that fives, it's like that magical number reduces your cost, your monthly payment. I think we're going to see a nice little surge here somewhere Q2, Q3. What are your thoughts on it?
Yeah, I mean, it's definitely going to line up that way because that lines up with the spring market where people in the colder states start actually wanting to getting out of their house again and looking for properties. And if that's the case, mortgage rates kind of, taper off a little bit, maybe even dip down a little bit that time of year. And with reduced inventory, I think pricing is going to hold during that time period. It goes back to, econ 101, right? Supply versus demand, essentially.
Yeah.
I don't think we're going to see the 20% plus growth anymore.
Agreed.
And actually, in some of the markets we're in, you're starting to see that pullback a little bit, right? A few months ago, the house might have sold for 350. Now you're probably going to get 330, 340 or something like that in certain areas. And it's going to sit on market a little bit longer too. So, if you're a buy, renovate, and resell type of investor, you got to factor in maybe 2 more months of holding cost, whether you have that interest on it or just general insurance cost in your rehabs, because they're going to take longer. They're going to sit on the market, which it's a normal thing.
Yes.
Not everything flies off in a week like we were accustomed to the last year and a half, call it.
I was going to say that, Mike, just to reiterate that. So we're going into more of a normal market, right? And not even normal market. We're still in a hot market, but more normal hot market, right? Not the crazy pandemic market where everybody was looking to move at all one time, record low rates, all those kind of things. We're just going into more of a normal market. And we're also in what I call fractured markets, right? Where real estate, you can't look at real estate in general across the country because each market is different in and of itself. And that's why it's fractured market. What's going on in Florida is different what's going on in Nevada or Boise, Idaho, or even markets within Texas. So if you look at Texas, Dallas is still fairly hot, even though it's cooled from where it was. Austin still has higher inventory, right? So they have more price corrections like Boise, Idaho has. So we're hitting these fractured markets. And I think that's something we're going to see potentially for years to come here.
Yeah. I mean, it goes back to the old saying, right? Real estate's local. And as being in a virtual investor where we buy across the country, Paul, you see those differences.
Yes.
And, hey, maybe this market's starting to cool. We either hit pause for a little bit, see where it goes in that area, or instead of thinking we would get this for it, you knock it down 5%, 10% to be safe. Those are things we're starting to see across the nation. Some areas being stronger and continue to hold up in value and grow. Others are starting to see a slight decline.
Yep, for sure. And yeah, this whole fracture market thing, though, I do think will kind of continue with states like, Illinois, which think about it from a landlord perspective and think about it from an investor perspective. They want to go where their money's treated best, where they can evict people quickly and easily. And those are going to be typically your red states, your Tennessee, your Texas, your Wyoming, your Floridas, your Alabamas, Carolinas, right? These states, even Indiana and Ohio both fall into that too. People are going to be shying away from Illinois, especially as buy and hold investors. They're going to shy away from New Jersey and those kind of things. And Mike and I go over this a lot. We teach you guys, we try to teach our students what markets are probably better. If you want to be a long-term hold guy, what markets you should look at compared to if you just want to be a fix and flip guy. It's still fine to fix and flip in Boston, right? You don't necessarily want to hold property there, but to fix and flip, you can still make big margins because there's such constricted inventory. And to talk a little bit more about constricted inventory, Mike, I was just looking on our MLS up there in Ambler, Pennsylvania, where normally in a regular market, there's hundreds of deals for sale at any given time. When I looked last week, there were 2 properties on the MLS in Ambler, 2. It's unbelievable.
Yeah.
Just restricted inventory.
Yeah, absolutely. you're speaking about what you're saying earlier, where people move to. I mean, I got an article up here. Do you want to kind of cover like top
Yeah, let's
states
do that.
people are moving to? Figured good segue jump.
Absolutely.
This is through realtor.com. And recent article earlier this month in January of 23, they kind of looked at 2022 and, what are the top states people moved to and the ones they left in last year. And then one of the things that Paul mentioned earlier was Illinois. We've done some wholesales and rehabs in Illinois, and it's a state where, people are leaving in general and going to other places of the country. Let's scroll through here to see if they have a list or anything like that for us. Nope. All right. So let's just see what they said here in the article. So top spots for those moving across state lines in 2022. Again, no surprise. These are basically states that you just quoted a few minutes ago, Paul. Sunny South and more rural areas. The northeastern states boasted well for more affordability of cost of living. See if anything else here hits.
And that leads into the Pocono Mountains, right? The Pocono Mountains have still been a red hot market. And a lot of people moved from New Jersey and New York for tax savings, right? And also for just lower cost of living.
Yeah.
Right? That fits right into that there.
Yeah. And again, people are sick of the cold. Not everyone likes it, but when you had a job up there and you had to work, and now you could work potentially wherever, depending on, what industry you're in. Those people that weren't fans of the cold in the Northeast and the northern Midwest states are going down south or, Southwest type of states where the climate's a little bit nicer. The harsh winters aren't as harsh down there.
Yes.
So that's a trend we've been talking about this for the last 2 years now, right? Ever since March of 2020, where people realized, hey, I could live anywhere now in the world, and they're starting to move.
Yeah. And that fits into our model, right? Yeah. Buying all over the country. We can decide, all right, where are people heading? Where should we look to buy that we're going to get our biggest bang for the buck? And that's what we've done over the past couple of years here.
And again, based on our experience, Paul, right? Here's a sentence here I'll highlight. Properties we struggled with that we did this year and we noticed are these two states right here, Illinois and New York. And again, it's just an exodus from that state into the call it southern and southwest states that we've talked about earlier.
Yeah, that's our longest hold states in Illinois, Belleville, and also in Auburn, New York right now, right? We're just sitting on these properties.
Yeah. And then there's multiple reasons. Illinois, you got the weather in the northern part of the state, and then, tax reasons, et cetera.
Right.
That, people are starting to flee. But it looks like this is interesting data from realtor.com because they're just using the whole U-Haul rates and the Atlas van reports, basically. These are people moving companies, and you clearly see where these moving vans are headed to and from.
Mm-hmm.
So I figure it's a good article. It kind of validates what we were saying earlier, what we're seeing in real life in real estate investing. And then here's the data supporting that reality.
Totally. I'm a statistic. If you look at the next line, older members of Generation X, hey, that would be me, right? And baby boomers were most likely to relocate. It is true. Point of life, right? So for me, and Mike knows why I relocated down here to Florida, but I knew my boys were older, but they were definitely affected a little bit with school when went virtual and everything shut down. But Sydney, my youngest, who was she was in second grade at that point, going into third, we knew they were going to lock down again. We knew they were going to go virtual, and it was going to be a problem for her. She struggled that year. So we brought her down here to Florida. We were looking at the choices were, at least I told my wife, Wyoming, Texas, Tennessee, or Florida. And really, realistically, Texas and Florida were the two that we were looking at the most. And it ended up being Florida, and Florida didn't shut down at all. People see that, people know that, and that's why there's still, caravans of people coming down here to Florida still now, to both Southwest and North and Southeast. So it's still coming, and Tampa's still doing unbelievably well. I think it's right now the number one market still.
That's incredible. I feel like it's been that for 12 plus months now.
Right? Yeah. Tampa or Miami, they've been taking turns.
Let's jump into this article. I thought it was interesting. It's 2022 year-end report. The headline is Miami was America's most competitive rental market this year. 2/3 of renters renewed leases. And some of the other headlines here that they talked about, an average of 14 renters competed for each vacant apartment, and the overall national competitive score was 59 out of 130. Miami was 22's hottest market, followed by Grand Rapids, Michigan, Orlando, Florida, Harrisburg, Pennsylvania, and North Jersey. I'm guessing that's the exodus of New York City people.
Yes, that's what it was.
They didn't want to be in Manhattan, but they still wanted to be close to the city,
Yes.
probably for multiple reasons. And then Michigan's undersupplied Lansing and Ann Arbor area. Again, that's Michigan State and University of Michigan. So really good universities both there.
Yep.
Entered the top 20 list as the top 20 list of the hottest rental markets in 2022.
It's interesting though, Mike, Michigan, we've done a lot of deals recently in Michigan, right? But Grand Rapids has been on the rental list since I want to say 2012 as one of the hottest rental markets in the country for a very long period of time. And in big part, it's still affordable compared to other rental markets, right? You have lower cost of living and stuff there. So Michigan is pretty impressive how that state has continued, but you got a lot of great universities, like you said there, plus jobs.
Yep, exactly. Yeah, I mean, recently we've been picking up a lot in Michigan. Our one acquisition guy, I think I quoted him as a king of Michigan recently, just because
that's right.
Picking up in Michigan.
I think he's gotten 4 or 5 for us recently in the past month and a half there.
Yeah, and then here's their actual full top 20 list of the most competitive rental markets this past year in 22. Again, Miami that we talked about, Grand Rapids, Orlando. Interesting, Harrisburg.
Very interesting.
That, you know, state capital of Pennsylvania. A lot of medical fields and government. I don't know of another reason why I'd move out there though.
Yeah, you know, it is very interesting. That's actually something we got a couple guys in our mastermind groups that are big investors in the Harrisburg market.
Yeah.
But I think jobs, has Amazon put anything out there? I thought Amazon might have had additional hubs there or talking.
I know off of 78, which dumps into Harrisburg, there's a lot of warehouses being put up there in central Pennsylvania. So maybe.
Could be it.
Yeah.
Or government growth. Right.
That's a bad thing.
That is a very bad thing, but it is interesting. And it is affordable place to live too. So maybe that's part of the reason it makes that list.
Yeah. And then the other markets, I mean, no surprise here, we talked about this earlier. Yeah. This is just New York City.
New York City. Yeah.
Milwaukee strong, you know, Central Jersey. This could be really extended New York City.
And also combination New York City and Philly.
And
right?
Yeah, you could get up
those markets.
Yep. Orange County, California, and you got Rochester, Omaha. I mean, this is your neck of the woods here.
Southwest Florida. Yeah.
This is my neck of the woods here, suburban Philadelphia, San Diego, Broward County. Isn't that just outside of Miami, just north of Miami?
It's Fort Lauderdale. Yeah.
Fort Lauderdale market. Yep. Richmond, Virginia area, Pittsburgh. Pittsburgh's been strong for a while. Tampa, and then suburbs of Chicago, and then surprise Connecticut. Again, that's a northern suburb of New York, actually, probably Bridgeport, New Haven, and then the Lansing, Ann Arbor we talked about earlier.
Yes. Yeah. A lot of college towns, potentially. New Haven might be, or
Yale.
That might be a college town. I'm not 100% positive, but
I believe Yale's in New Haven. So,
okay. Yeah. So some of those things get a little bit of push from that. Some just for where jobs are right. Maybe more prevalent, maybe some company move there, or it could be pharmaceutical up there. Yep. Don't know. But yeah, interesting list, right? And Ann Arbor's a very expensive area. Ann Arbor, Michigan, where the University of Michigan is, but it's a very expensive area, and rents are pretty damn high in that area. So this makes sense.
These two columns are pretty interesting. I'm just looking at it real quickly.
Yeah, look at that.
Clearly here, occupied, everything's 95 to almost 100.
Yeah, that's unheard of, really, because
then prospective renters per vacant unit. That's insane. That's a lot of competition you're going against. That's what's driving these rent increases up as well, obviously.
Yep.
But I can't imagine going through a 2-bedroom apartment in Milwaukee and I'm going against 19 other people.
That is unbelievable and surprising.
Yeah.
Interesting.
So,
maybe get out of Minnesota or whatever, get out of Minneapolis, a crazy city. Maybe Milwaukee's better. I don't know. It probably isn't a whole lot better. It's close to it, not too far, stayed away, right?
Yeah. But I mean, at the end of the day, areas where we picked up a lot of real estate deals recently, Paul, they're all up here on the list.
They're all
Florida, Michigan, Pennsylvania, right?
Yes.
That's your top 4 right there. And then those areas are spread throughout kind of this whole top 20 list as well.
Sure are. It's a very interesting list.
Yeah.
And it makes sense. And you want to be investing where those, because it gives you 2 different disposition methods, right? Not just fix and flip or just wholesale, but you could sell it to somebody who's willing to pay a little bit more if they're going to do a cash flow rental.
Yep. Let's see if anything other nuggets jump out of here in the article.
More locations here, it looks like.
Yeah, just explaining where people are going to.
That's a very good article, though.
Yeah,
Yeah.
plenty of intel here, kind of talking about where people are headed. So what's this is an interesting. This is the hottest small rental markets of 2022.
Oh, this would be a good one to look at. You
So
see, like these.
you got Fayetteville, Lehigh Valley again,
Yeah, Allentown.
about an
That-
hour north of Philadelphia. Lafayette, Asheville, North Carolina. This has tremendous growth in Western North Carolina for a while.
Beautiful
Madison,
area.
you got College Town here, Tulsa. Yeah, that makes sense.
Okay.
Providence.
College towns.
Yeah.
Knoxville's had growth for a while. Knoxville is getting growth extended from Nashville,
Yeah.
even though they're not that close. They're in the same state. That's just another city. It's growing.
Yeah, it's a nice area. I mean, it's close to the Rocky Mountain or Smoky Mountains.
Smoky Mountains. Yep.
Beautiful area, state capital as well. So plenty of opportunities there.
That's where my newest acquisition manager down here in Southwest Florida came from, Knoxville.
Yep. And then again, no surprises really. A lot of these here, Fort Wayne. These are kind of good, solid, smaller
Blue collar working class areas, lower cost of living aside from California down there, right? But your lower cost of living.
Yeah.
Albuquerque, New Mexico has really exploded the growth there.
Yeah. And again, it's consistent story as above. I mean, occupied apartments are almost 100%. And then you're going up against 15 to 20 renters.
8 in Portland, Maine. That blows my mind.
Oh, good. Yeah,
you believe that?
Wow.
Yeah. People want to get away, out off the grid, away from things, right?
Yep.
Yeah.
So the rest is just their methodology on how they calculated everything. And then, the last article I had here is this is what, bank rate thinks, they actually think mortgage interest rates are expected to drop in 23 and by how much is kind of like the teaser of the article.
Yeah.
And if we kind of go into the article, the interest rates for a 30-year fixed rate mortgage in the US is expected to drop to 5.25 by the end of 2023.
That'd be great. 5.25 rates, that would spur the market. You would have another burst in demand and would further reduce inventory or push inventory up temporarily because people that didn't get to sell before because the rates went up, maybe they're deciding to.
Yeah. So I guess this is what their theory is here. I didn't read the whole article, but they think the Fed will probably stop raising rates in March, April timeframe. And then from there, it looks like here, based on this headline, they think the economy might slow down a little bit. So the Fed might then actually, if they get to a 5.50 range on rates, they might start chipping down again as well throughout the end of the year. So by the end of the year, they're expecting, Fed might lower rates to whatever, 4 something maybe, and then, or 3 something, we'll see what the article says. And then eventually you might see mortgages around 5.25 by the end of the year of 23.
I can definitely see it's definitely trending that direction. Inflation just dropped today to 6.5%. So it continues to drop, 7.1 in December down to 6.5 now. So things they've done have the demand destruction that they've already caused is working.
Yeah.
It's reducing inflation in certain things.
The thing people got to remember though, is just because year over year inflation might be flat, that year before 10% increase is already baked in the cake forever for you. So at the end of the day, it's still more expensive than it was a few years ago for a lot of people, just because inflation year over year is unchanged.
And it went up more than wages did too.
Yeah, for most people. Yeah, exactly. So Paul, that's kind of all the interesting articles I kind of read over the weekend. I had just wanted to share for the channel. Any other comments, thoughts, or any market updates?
It's just really good data that tells us what areas we should be focused on as investors, right? What are the areas that we expect growth in over the next few years? And what areas do we expect reduce, what markets are going to get hit worse than other markets? Because we still do expect different areas in the Northeast to get hit further. In California, as the exodus continues there, Boise, Idaho, those markets to reduce a little bit, and markets where, think about it from this perspective, baby boomers, right? We still have 15 years worth of baby boomers to move down to the Sun Belt somewhere. So if we forward think and go, all right, we still got 15 years of that generation continuing to move down there, and that's the richest generation that we have, right? Because Gen Xers, we don't have the same amount of money that baby boomers have. Millennials don't have as much either, right? So they're going to be pushing those markets and continuing to drive them. So I don't think you're going to see Arizona or Florida or even Texas or Tennessee get hit too bad during the next downturn, because I do think we are heading into a recession there, but we will see. It's good info, good data, Mike.
Yeah.
All right, guys, we will catch you on the next video.
See everyone.